Jeffrey Benson, Jeffrey Benson, Jeffrey Benson. He's a forex trader that started his trading career sometime in 2016, and today he has become a multi-millionaire from trading the forex markets. His favorite pair is the GBP USD, and in today's video I'm going to see how much I can make using his ultimate secret strategy to flip my small account into a large account. Now my goal is to see if I can try and make $1,000 before the end of this video upwards. Anything less than $1,000 is literally a failed goal. So guys, this is my plan. First things first, I'm going to head on to YouTube and watch a whole lot of videos about Jeffrey Benson explaining his secret strategy, and then I'm going to learn his strategy, and next I'm going to get ahead and teach his strategy to see if I understood it clearly, and up next I'm going to see if I can make money from his strategy. Let's see how much I make. And just in case I forgot to mention, this guy is a baller. I mean, he teaches Don Jazzy how to trade on a regular basis. So if Don Jazzy can learn forex trading from him, we also can learn forex trading. He also has a free Telegram channel in which for some reasons I wasn't granted access. I don't know why, but I've tried and still it didn't work. So I decided to try it a different way. Go to his YouTube, learn his strategy, teach his strategy, and make money from his strategy. Ladies and gentlemen, this challenge was so amazing. So I want you to stay tuned up until the end. You're not going to want to miss out. So ladies and gentlemen, welcome to another video, and in this video I'm going to be teaching you the Jeffrey Benson win rate strategy, the strategies that you can use to grow your small accounts into large accounts. So if you're ready, let's jump straight into this video. So as you can see on my screen, this is GBP USD. Now first things first, for those of you that know Jeffrey Benson is a fan of the GBP USD pair because it is his favorite pair and it is his most traded pair also. That is one. Now Jeffrey Benson has 3 keys in which he uses to trade his strategy. First things first, top-down analysis. Second, key levels. And 3, round psychological levels. So having known these 3, we can now add these 3 and create the ultimate Jeffrey Benson strategy so we can work with it. Now first things first, top-down analysis. Now, one thing you should understand about a top-down analysis is simply going to a higher time frame and looking at the overall direction of the markets. Then we now subsequently go to lower time frames. I've used this example before. A person who is on the ground floor of a building is not really going to see anything, and a person who's on the 5th floor of a building is going to see the environment more than the person who is on the ground floor. The person who is on the 20th floor is going to see the city or the environment more than the person who is on the 5th floor. Then the person who is on the 50th floor is going to see the topography of the entire environment more than the person who is on the 20th floor. And the person who is on the 100th floor can literally see the whole world. So it depends on the time frame. The person who is on the 100th floor is like the monthly time frame. The person who is on the 50th floor is like the weekly time frame. The person who is on the 5th floor is like the daily time frame. And the person that is on the 2nd floor is the 4 hours. And the person that's on the ground floor is the 1 hour. That's just how the market is. So each floors will really determine the overall direction. And this is what I mean. Let's go to the market. So first things first, we're going to start with the monthly time frame. The monthly time frame, what have you seen in the monthly time frame? The monthly time frame is on a bearish move, right? Because it's making lower lows and lower highs. That's how you used to know a bearish market. So this is a low, this is a lower high, this is a lower low, lower high. This is like a little consolidation. Then right here, it made an equal low. You see the low is equal with this one. So it's not a lower low, it's actually an equal. If he had come down here, it would have been a lower low. Then it came here and it made a lower high. It bounced a little bit below, but then it came again and finally broke below, and so on and so forth. So that's for that. We are now sure that on the weekly, on the monthly, remember the monthly, the 100th floor, the market is on a bearish move from the 100th floor. So then if we now step down to the weekly time frame, what is the weekly time frame saying? And another thing you should know about the forex market is, listen, you should learn to stretch in and stretch out, because if the market is like this, it looks like the market is consolidating. Do you understand? But it is good to stretch out. Don't stretch too out, like you stretch like this. No, don't stretch it too outward. It's going to look kind of confusing. Let it be somewhere in the middle. So this is a good one. So from the weekly now, what is the market doing? It's still on a downtrend, is on a bearish trend because it's making lower lows and lower highs, right? We can look at this. Is a low, lower high, lower low, lower high. Then we have this equal low again. Then we have this equal high again, then the lower low, and here. So it's, who knows, it could still continue to the downside. We're just guessing. So remember, the monthly is bearish, the weekly is bearish. So the 50th floor is bearish, the 100th floor is bearish, the 50th floor is bearish. Then we can now go to the daily time frame. The daily time frame is like the 20th floor. So what is the daily time frame doing? The daily time frame, now this is where we could have a little bit of confusion. Now what's the daily time frame doing? The daily time frame is not bearish. The daily time frame is bullish. The daily time frame is making higher highs and higher lows. So you can see this is a low, this is a high, this is a higher low, higher high, higher low. This is not a higher high right here, because if it had broken above, then we would have said it's a higher high, but it made a little consolidation. But then this is a higher high, and this is where it is right now. So if this market breaks beneath, retest, then it means it has done a shift of structure, but it has not yet done a shift of structure. So we're still on an uptrend. It is about to change direction, but the markets so the monthly is on a bearish move, weekly is on a bearish move, daily is on a bullish move. So we can now see a little confusion in the market here. We have bearish, and now we also have a bullish. But like I said, this daily time frame is about to change direction, but we're going to come to that later. Then if we now come over to the 4 hours, the 4 hours is on a downtrend. No cap, we don't need to speak about it too much. We can see clearly that the 4 hours is on a downtrend. So according, I don't really go less than the 4 hours. Maybe you can decide to go to the 1 hour. The 1 hour, what are we seeing? Yeah, the 1 hour is also on a downtrend. So I don't really go less than the 4 hours. I'll stick with the 4 hours. So from the monthly and the weekly, it is bearish. The daily is bullish. The 4 hours is also bearish. So we now have more time frames in sync. More time frames are saying the market is bearish, the market is heading to the downside. So we know that from this trade we should be looking for selling opportunities more than buying opportunities. That's one thing you should know. Another thing we can do is marking out the highs and the lows. But we've gone into the second session and we've now entered the key levels. So we can I don't really like marking out. I don't like marking out key levels from the weekly. But if we still want to mark out key levels, so what part of the market does the market get to and retrace? What is a key level? A key level is a price, or is a specific price of the market where the market will get to and kind of retrace or consolidate or maybe break above and retest. That is a key level. Just, you may not understand, but to draw out a key level here, we can see there is this key level right in this zone. So we see the place where the market is respecting. It came here, it was not able to break above, it came back down, went up, came back down, went up again, came back down. So whenever it gets here, it always go to the downside unless it breaks above. And it came here again, went back down, came here again and went back down. So that is a key level. So we know that this price is respected. So that is one key level. Is there any other key level we can see? Yes. So this is another key level. This is another key level in which we're seeing. Is there any other key level we can see? Yeah, there are many more, but we don't really want to draw too much. This is another key level we can see. So this is another key level in which we're seeing from GBP USD. Now we can this is a weekly time frame, then we go down to the daily time frame, and then from the daily time frame we can now mark out other key levels too. We can see, so there's a difference from one key level to another key level. So we can say that the market is actually respecting the key levels. So from the daily, where are the minor key levels we're seeing? So there's this kind of minor key level within this area. Like I said, it's kind of a minor key level within this area. can adjust this a little bit to suit here. And another thing in which you can do that can help your drawing is come over to this place where you can see candlesticks and change it to line. It's going to help your drawing. Yeah, it's really going to help your drawing. So you can see that the graph now has changed. So you're going to learn how to place your lines correctly. Now you know that the lines, they don't touch perfectly, because we can see this is a one touch to here. It did not touch it perfectly. See, it came below. So it's not a perfect touch. And it looks like a mountain steep. And then again, we've identified the key levels. Is there any other key level in which we can see? Let's go down to the 4 hours time frame. So I don't think there's any other key level in which we can see. So right now, when we've identified the overall direction of the market, we're looking for selling opportunities. That's one. Then two, what's the next thing? We've drawn out the key levels. Then after key levels, another thing Jeffrey Benson uses to predict the direction of the market is the round psychological levels. So what do I mean by round psychological levels? Now, if you look by the price, you can see 1.29000000. It all ends with 000. But now, if we look carefully, where this market is, it didn't end with 000. It ended with 833. So that is not a round psychological level. A round psychological level is like, let's say $100, $200, $300, $1,000 is a round psychological level, but $375 is not a round psychological level. $593 is not a round psychological level. Rather, $700 is a round psychological level. So these are things you need to be understanding. Maybe a whole lot of times you could be confused about round psychological levels. The price would only show at round psychological levels, but there are places you can mark out. For example, if you look at my cursor right now, my cursor, if you shift it, it's not a round psychological level. So it's showing 1.25718. So that is not a round psychological level. So another thing, it is what Jeffrey Benson uses to predict the market's round psychological levels. So with round psychological, which makes so much sense, we have seen that the overall direction of the market is bearish. That is one. Two, we've marked out the sensitive points or the key levels. And then we now want to look for round psychological levels where the market will bounce into and, see how the market will go. So if we're going to change this back, there is a mini point. We can see there's a little point here. It's very little. This is only 4 hours. If we go down to the 45 minutes, we can see how the market broke below here, retested, and is going. So what we're going to be expecting now in this market is we're expecting sales. We're looking for selling opportunities in this market because we've understood that the overall direction is bearish. So we don't want to be trading against the trend. So we're going to be looking for breakouts and retests to this level. Then we can now take it to the downside for GBP USD. So we're going to actually be looking for short positions and not long positions from somewhere like here to the downside, because this is a major key level. From somewhere like here to the downside, that is what we're meant to be expecting from the market. Now, another thing Jeffrey Benson uses to analyze the market, another prediction, another key he uses to analyze the market, in which I did not really talk about it, is chart patterns. Now, chart patterns are like double tops, double bottoms, head and shoulder, inverse head and shoulder. For example, here we can see a head and shoulder. Let me draw it out for you. So this is the right shoulder, this is the head, this is the left shoulder, then it broke below. So this is the neckline, it broke below, and it could come back here, so we could take it to the downside. So seems like this market could even get back to this level. Maybe it wants to come back to this level, and if it comes back to this level, this is what I drew initially, but look at what I'm saying. If this market comes back to this level, if this market from here comes back to this level, we're going to take the sell to the downside right here. So yes, it's a mini trade. It's not that much, but it still explains the trade better. So we're going to just take the sell. So we're going to take the sell. So this is like a 1:2. It's not that much, but still, it's going to prove my point. Now let me explain the chart patterns, the head and shoulder, the inverse head and shoulder, and all of those stuff. When the market is on an uptrend, so this is a high, and this is a higher low, and this is a higher high, and then it makes another higher low, and then it comes back here. It does not break above. It comes back here to make an equal high. That's one name. Another name is double top. Another name is M. A whole lot of people could call it different things. So this is a double top. Then it comes below here and then comes back to this neckline. The neckline is here. Comes back to this neckline to retest, and then it goes to the downside. So according to this double top pattern right now, we can now see that first things first, this is the head, or this is the double top head, and now this is the neckline of the double top pattern. We can see, so this is the head and this is the neckline. Then if it's inverse, if it's the other way, if it's double bottom, so it is making lower lows and lower highs, lower lows and lower highs. Then it comes back here again to make an equal low. Then it breaks above. Then it comes back here again to the neckline to retest, and it starts going to the upside. It is a sign that the market is about to change direction. So we can see that this is the equal low, this is the head or the double bottom, and then this is the neckline. So I believe you understand. So on most cases, it is best to enter a trade at the neckline. It's best to enter a trade at the neckline of the double bottom or the double top or the double whatever. So at this point, you can now enter this trade to the upside because you've received the double bottom. Here, you've received the trade for the double top. It is best to enter through the neckline. So you can now take the trade to the downside. That is how it is. And then that is for head and shoulder. Sorry, that is for double tops and double bottoms. Then for head and shoulder and inverse head and shoulder, the market could be doing something like this: a higher low, higher high. So this higher high now could be the neck or the left shoulder rather. Then it makes a higher low. Then now it now makes another higher high. This higher high is the head. Then instead of making a higher low, it now comes exactly back down here to this exact place, and it stops here. Then the next thing it's going to do is now going to come again here. It's going to come a little bit higher or lower, but let's say higher. Then it comes and it breaks below, and it comes back here to retest, and then it starts going to the downside. So we can see that this is the head. So this one, it has one head. So this is the head and shoulder. That is why it's called a head and shoulder pattern. So this has one head and the shoulder, and then this is the neckline. So this is the neckline of the head and shoulder. Like I said, it is best to enter at the neckline. So if you're entering the short position, your short position is going to be at the neckline. So if you're entering a short position, your short position is going to best be at the neckline. Yep, so this is a very great one. Then if it is, so this is for head and shoulder. Then for inverse head and shoulder is when the market is going to the downside, lower lows and lower highs. So then we now have the left shoulder. Then it comes back here and it gives us the head, and it comes again, then gives us the right shoulder, breaks above, comes to the neckline, retests, and starts going to the upside. Then we can see this is the head, but then this is the neckline. But then this is the neckline of the head and shoulder. So we're meant to be entering our long positions at the neckline. So that is where we're meant to be entering, at the neckline. So if the market is bearish and it makes an inverse head and shoulder, it's about to change direction. If the market is bullish and it makes a head and shoulder, it's about to change direction. If the market is bearish and it makes a double bottom, it's about to change direction. If the market is bullish and it makes a double top, it's about to change direction to the downside. And I hope that makes sense. So then we now come back again to this head and shoulder in which we have here, like I said. So seeing a head and shoulder, we now know that the market is going to the downside because of the head and shoulder. Listen, so this wouldn't confuse you. If the market was making higher highs and higher lows, was going making higher highs and higher lows, and it came to this level to join, and it came to this level, it made the right shoulder head, left shoulder, and it broke below. We are now sure that the market wants to change direction to the downside. Forgive so many lines, we are sure that the market wants to change direction to the downside. But then one thing I love about this specific trade we're dealing with is that the market was already on a downtrade. It was already on a downtrend. Do you understand? So there's nothing that is changing, and it shows you this inverse, or it shows you this head and shoulder. So it is a more confirmation that the market is still going to be going to the downside. So we're going to be expecting one of two things. It's either from where the market is right now, the market is going to come to this place to retest, and then we take it to the downside. Or the second option is come to this place also to retest, and then also we take it to the downside. So one thing we know is that the market is going to the downside. So we're going to be looking for short opportunities, selling opportunities here. That is one. This is our take profits one. This is a 1:2 risk to reward. And then we're going to now be looking for another selling opportunity. We're going to now be looking for another selling opportunity here also. Then we now also take it to the downside. And I believe this is self-explanatory. So first things first, the time is 4:52 a.m. and I'm going to step out of the market. So we're going to wait till the market to get to this place. And when it gets to this place, we can now take the trade, and we're going to see if Jeffrey Benson's strategy is a good one. Bye for now. All right, so ladies and gentlemen, testing out the Jeffrey Benson forex strategy, because I have a very good pair here. We're going to be entering the GBP USD pair. GBP USD pair is right here. So we're going to be entering this pair, and I set it to, I was expecting it to come to this area of interest or this key level. And as we can see, it is at a round psychological. You know, one of Jeffrey Benson's trading strategies is round psychologicals, and this is actually GBP USD, his favorite pair. So we can see right here is at a round psychological 1.2600. It got here, so it's retracing to the downside. So we're going to be entering this trade to the downside. It has already started getting a red candlestick exactly to this point. So I will be entering this trade right away. All right, ladies and gentlemen. So I can tell you for a fact that the Jeffrey Benson strategy works perfectly. And take a look at this. So this is GBP USD, the trade I was. So actually I closed the trade here because it could still come to, it's still going to have some momentum to come to the downside to get to this level. But the reason I closed it here was because tomorrow is going to be 25th of December. So the time is actually 12:43 a.m. 24th of December. So that is the time. So I don't want to be holding a trade till 25th of December, Christmas Day. And then also another thing I wanted to say is I'm currently recording 3 videos that are in sync. So if you watch another video, you could hear me say something similar to this, but just in case you do, fine and good. So ladies and gentlemen, I think I'm happy to announce that the Jeffrey Benson GBP USD strategy is going well. I closed the trade, and I closed the trade at... So this was how we ended. Yep, that was how we ended the trade. So approximately $5,000 from GBP USD. Whoever you want to learn trading from, you're free to learn trading from. Myself specifically, if you want to learn trading from me, it is fine. In the nearest future, I'm most likely going to be opening a Telegram channel, or maybe even if it's not a Telegram channel, I'm going to be launching my Forex info product. So stay tuned. Even if you want to learn Forex from me, fine and good. We can have it done. We can work together, okay? And so if you look at our channel, Mr. Sam 2.0, we've had 1,000 subscribers and 118 videos, and then these are some of the latest videos I've uploaded. You can see this one 2 days ago, 546 views. And then we come to this page, then we come over to earnings. So we've successfully filled this, and this is 2,186 public watch hours. So it's about half, or more, a little bit more than half. So we now need to fill this one also before we get into the monetization policy. So ladies and gentlemen, I would really be excited if you all can share my videos, subscribe to the channel, tell people about my channel. Okay, so we're going to grow. I want to know if I can hit the milestone maybe before 2024 runs out. So maybe 2025 we start on a new here. We start on, or maybe even if we don't hit it before 2024 runs out, maybe 2025 January we're going to hit the target. Okay, thank you.